recipes for technical trading success in Cook's Kitchen.
Welcome to the growth stock correction. Hey, here's the NASDAQ 100. What correction, right? It's holding up great. Minor pullback, stuff to buy, right? Well, let's go under the hood and see what's been happening. This is a table that went the rounds of Twitter a couple weeks ago from Charlie Bilello, and it just shows you the pain underneath in many of our favorite growth stocks. There's PayPal down 37%. It's down even more in the last 2 weeks. Palantir Technologies, DraftKings, I was never a fan, but there it is. Pinterest, I'm a fan, and there it is, down 50%. ROKU down over 50%, and all of these are worse. We'll look at the charts. Wix, the Chinese dynamic duo here, Baidu and Alibaba, Zoom, Robinhood, CRISPR, oh my goodness, ARC Genomics, the ARC Invest Fund with all the CRISPR stocks and Exact Sciences. Just brutal. I've had to sell some, looking to buy some back. We'll see what happens here. Zillow's in here. So, a lot of blood underneath the hood of the vehicle. So let's look at some of the stocks. So how bad is Roku? There's Roku. Highs above 480, more than cut in half. I mean, it's down over 60% now. Unbelievable. PayPal, which I did not expect to go down here. I'm actually looking to buy PayPal under 180, and it looks like I'm going to get my shot here as this thing just craters too. And there's something going on with the big fintech. I've done a lot of content lately on the smaller fintech, the small cap and mid cap fintechs, and the private ones that are getting snatched up. But when they're taking Square and PayPal to the woodshed, it makes you wonder what's going on. I have a small hypothesis that maybe there's some regulation brewing that we don't know about, whether it's with crypto or something else, that's going to impact what Square and PayPal have tried to do here lately. Because the thesis for being long them, I always buy Square around $200, and now that's not working too well anymore. Something's changed, so we need to pay attention and find out what that is. Let's look at some stronger stocks, all right? And to do that, I'm going to go to Twitter. Another good follow, Chris Peruna. He put this together over the weekend of relative strength. About 30 companies on here with strong relative strength. So obviously you see Nvidia up here, Unity Software, 98 RSI on the 3-month relative strength. Etsy, that's interesting. The Trade Desk, love to see that. First of all, I own Nvidia, and we're not selling anything up here. Looking to be buyers, in fact. And Trade Desk, we got 120% gain out of it, and I'm looking to get back in. So, focus on the strong stocks if you're looking to get back in. What's interesting here is some of the big data analytics companies are really strong too. You got Datadog, Zscaler, which is more security, Snowflake, and what else? Oh, MongoDB. And I'm going to show you another data analytics company that is also strong, not on this list. For some reason, didn't make it. I think he said that there's only all but two on the, Chris says there's all but two on the list, and I think my other guy might be down here. I'll show you in a second. Shopify has been tough. My target this year was 1,700. I dropped the ball trying to get back in around 1,300, and my target was, like I told people buy at 1,240, 1,280, got down to 1,286, and then you got a few more shots under 1,400, and then it goes to 1,700. So that was a beautiful October dip buy. But pay attention to these strong stocks, right? Because these are the ones that are going to come out of this the best when it's over. Obviously, Apple. So let's go back to the charts and just see. So let me show you this other data analytics company. It's called New Relic. Newer is the symbol. On early November 8th, they reported a blowout quarter and raised guidance. And it was a sort of a sea change for them because they were changing the revenue model and things were ramping. It was working for them, going to a consumption model. And analysts just were climbing all over themselves. So you look at this pop, 38.5% in one day. Pulling back here, I did a profile of the company on Monday, for the Zacks top stock picks. You can just go on Zacks.com, enter the ticker NEWR, NEWR, and you'll find the video. And I was looking for 110 to hold just because those were the old highs 2 years ago. But everything's getting hit here. So I would look to be a buyer of New Relic 95-100. I don't think it fills this gap all the way. I don't think you're going to get there because the what analysts got excited about, and this company is Application Performance Management, APM. These are the guys that monitor enterprise apps, clouds and cloud SaaS services to make sure everything's running smoothly. There's no outages, no downtime, no bugs, that kind of thing. And sort of like a PagerDuty. PagerDuty does that too. And they could both, Fastly could use them both as a customer since Fastly had that big outage last summer. Anyway, one thing cool about Newer, as I explained in the video, is they have a unique way of capturing new customers. So you have to watch that video. All right, what else did I want to show you here? We looked at, did I show you Square? Oh, yeah, I think I showed you Square. Just melting down here. Yeah, I did. And PayPal. What's working? Obviously, let's look at, Nvidia's working. Why? It's just because this is the thing. Some analysts, like the guy from Deutsche, finally, after earnings here, he raises his price target from, what did he raise it from? From like 185 to 285. So he's still like neutral on the stock. Why? Because he's still looking at it as a hardware chip play. Nvidia is not a hardware chip play. It's a full stack hardware, software, and just the power of it for an enterprise, for a research institution to do deep data mining and modeling in science, engineering, real-time application management, right? You need this kind of, the GPU chips, when you stack them together, in billions of them in a single box the size of a chair, you get massively parallel architectures to simulate and monitor and mine and model just about any enormous data set. And it's built, NVIDIA, it's built on the CUDA architecture, which is Compute Unified Device Architecture. So that's why NVIDIA is still up here. Let's look at TTD. The trade desk I call the trade desk the CME of advertising, because they built an algorithmic exchange model for rapid deployment of ads in any given real estate, whether it's on the web or connected TV or Spotify. So that's why the trade desk is killing it. So yeah, we took profits up around 110, 120% profits because we owned it. We owned it from $50 before the 10-for-1 split. And so now I'm licking my chops here, looking to get back in. But see, they're just killing quality stocks here. So, I mean, I might buy some trade desk today here under 100. I really like it. All right, what else do I want to show you? Let's just look at Pinterest real quick. I just thought I thought with their e-com initiatives, and they just got the lead video guy from YouTube. So I thought they'd be doing more great stuff. We'll see. I mean, I think it's a buy here under 40. All right. We looked at the blood. We looked at what's strong. We're scratching our heads about Square and PayPal. We like NVIDIA and the trade desk. Did I show you Roku? Roku is a complete train wreck disaster. Look at this thing. Yeah, we looked at that. See, I wouldn't touch Roku. So here's my advice. And I did this podcast with Tracy yesterday. Tracy's got the Market Edge podcast. And she's just a monster on putting these out every week. It's not posted yet, but we actually did a podcast that's going to be titled something like, Growth Stock Meltdown. And you want to listen to that because we spend 30 minutes and we go into more detail. We talk about Peloton. We talk about Pinterest. But my big advice was, don't blindly buy anything right now that's on sale, that just because you've got a software company down 50%. This is the time to get to know the company, maybe nibble. So I'll give you this example. Let's go back to the bloodshed here. Let's look at Roku. Roku. I do not know and understand Roku's business model that well, and obviously somebody else didn't either. If they just, if they were paying over $450 and now the thing is trading $210, somebody had this wrong about the future of Roku. So that's something I know I don't understand well enough to be a part of. But Pinterest, I think I do. And I think my risk is low. And I think Pinterest will, the price to sales valuation is attractive. And I think they will be a force to reckon with as they expand in e-commerce. So buy things you know. DraftKings. I don't know DraftKings. I don't know what it's worth. I don't know the business model. I don't know the competition. I don't know, if it's a long tail or a flash in the pan. So that's why I stay away from stuff I don't know. PayPal and Square, I think I know. I'm getting killed there, but I think that at least on Square, but I think that you want to buy PayPal. I'm going to buy it probably this week or next under 180. Nothing's really changed in that fundamental business model. Nothing else I really want to look at here. So although Tracy and I did talk about Peloton and whether that has this interactive ecosystem that is attractive now. So that's my big advice: is buy what you know. So look for Tracy's podcast later today. So the last week was the best retail stocks. This should update later today with something like the growth stock meltdown, where she and I talk through it. And you want to be nibbling here selectively on growth stocks because what set the valuation so high? Why do we have things that traded at 30 times sales? Like Shopify is still trading at 30 times sales. Oh boy, look at this. Man, they're clobbering Shopify today too. I think, so what we're into now, and this is what I talked about with Tracy, is you start to get into successive levels of people who have profits that they did not think were going to evaporate. So if you own Shopify and you didn't take profits at 1,700, which was my target for this year, now you're sort of in panic mode, right? Even if you own it from 1,000, you wish you had taking profits up here. And if you just bought it at 1,500, now you're sweating. So this is the kind of thing where you keep hitting successive levels of forcing people out to take profits. That's the environment we're in now. I think it only lasts for a few more days. Let's look at the indexes real quick again. Here's the S&P. Big 1.9% down day yesterday. Tried to take out yesterday's high, failed. It's going to make new lows. I told my people last night that based on yesterday's action, we are now targeting 44.80, this gap fill, and then 44.40, this gap fill for the S&P 500. I think it slows down there. I don't think we go back to 4,300. This is the other thing you got to keep in mind is, did we just have the Santa Claus rally from October through November, right? So I thought this 5% pullback from September peak to October, I thought we'd go lower. Instead, they came for the stocks, right? And, ramped them hard. So it's almost like this was sort of the preemptive. Like somebody thinks, hey, there's strength here, they're buying, everything's good about the economy and fundamentals, earnings are strong, so let's buy into earnings and buy in advance of what we expect to be the Q4 rally. Well, they did that. So now how much is this pullback going to be? Maybe, these highs 45, 35 hold. I doubt it. I think we get down in here a little bit under 4,500 just based on what's happening with these candles. So, but I don't think it lasts. I don't think we're going back to S&P 4,300. So this is why you want to be buying on the way down. And in the article version, I always do an article version for all these videos. Just look down in the YouTube description and you'll see a link and it'll take you to the article version where I'll give more ideas, more analysis, correct any mistakes I made in this video, and I'll give you 3 or 4 stocks that I'm looking to buy and the levels I'm looking to buy them. Because my advice is always, if you're a believer that this is not headed into a 10 to 15% correction, then you are targeting specific stocks on the way down. And if you believe in the company and you know the company, as we talked about earlier, then you go ahead and put your orders in. So for instance, if I really believe in PayPal, as a buy 170, 175, I'm going to layer in some orders 175 to 170 and make sure I get them, because the algo flushes won't give you time. You have to be there. Your orders have to be there, unless you're lightning fast, unless you're right at your screen with the mouse and you know how to pull the trigger when things are melting down. That's That's why you have to have orders in, because if you're not watching, you won't get them. That's the lows are always the algo spike lows that hit the last stops, flush everybody out, and then they take it higher. So here's that's TT. I meant the trade desk. TTD, the trade desk. So here we are. I probably would have been a buyer at 100 in the trade desk. I'm not crying if I bought it at 100, and so I did not have an order in, but now I'm getting ready to nibble here because I don't think we get below 90. That's just my view on the trade desk. So I'm willing to bet on this long-term player. All right, we talked about a lot of stocks. Make sure you find the scroll down in the YouTube description if you're on YouTube. Find the article link where I'll have a lot more information and buy levels for some of my favorite ideas. And that's it for this week's Cook's Kitchen. We'll talk to you next week. Thank you.